Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 1st of August 2019, and we're looking at the smackdown in gold and silver prices post the Fed rate cut yesterday, and why we believe that happened. Yesterday, we published a video highlighting the Fed's decision to lower interest rates, entitled Fed Cuts Rates, First Time Since 2008 Assessment. We've put a link in the description below if you haven't already listened to it. In a condensed version, it would be fair to say that there are three main imperatives which the Fed claims to have, which will determine any further rate cuts, or in fact rate rises even. These are 1. The rate of inflation. The Fed is determined to achieve 2% inflation, and with core inflation over the past year standing at 1.6%, it sees itself as having some way to go. 2. To prevent the country moving into recession and to continually support economic growth. In the past, governments accepted that every 7 to 10 years a recession would occur, and they would attempt to build up a treasure chest of reserves in order to deal with it when it happened. This is more commonly known as boom and bust economics. That position has changed. The view taken now is to do everything possible to prevent the recession from happening in the first place. And if this means oiling the economy via cheap money, then so be it. And 3. To provide an insurance policy against global recession and trade policies which cause destabilization and uncertainty, thereby affecting both consumer sentiment and business sentiment, resulting in a deferment of investment. So by reducing rates early, it believes that it will engender confidence and stave off negative sentiment. Now, whether you believe what the Fed says or not, this is the storybook they are reading, and against which they are asking the American public, and in fact the world, to judge them by. An additional important point to note is that Jerome Powell, when answering journalists' questions, made it very clear on a number of occasions that he saw this cut merely as an intervention during a mid-cycle of an economy, and not as the beginning of a number of cuts at the start of a new downward economic cycle. In other words, it's for corrective reasons, not an emergency ongoing reverse policy. Now, of course, he has to say that, but he is hinting that if there is an economic upturn, because perhaps some of the trade issues are resolved, and consumers do not take fright, and global trade turns around, the FOMC could easily raise rates once again. Now, before we talk specifically about gold and silver, let's make one thing absolutely clear. If you're drinking the pumper's Kool-Aid, please do not waste our time telling us that the Fed cannot raise rates because the national debt is too high, blah, 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 blah. Peter Schiff was saying that when rates were just 0.5%, and he was wrong for the best part of 10 years. Yes, the argument is right to some extent, meaning that it would be problematic to move rates much beyond 3 to 3.5%. But up to that level, it fits well within the central bank's plans and economic modelling. If there was no world recession, the US Fed funds rate would today be 3.25% to 3.5%, because that was the trajectory it was heading for towards the end of last year. Now back to gold and silver. We have stated repeatedly that there are many variables which affect the price of gold and silver, which is why our channel is more diverse than just talking about shiny gold and silver coins. And we know we have won that argument by the number of other channels who are now aping us. And when originally a number of them set out as just take a look at the latest release of coin A or coin B, and have since converted to now talking about the economy and politics. Now, we don't propose to go into the variables that affect the gold and silver price again today. But one of the major factors which do affect their price is the value of the US dollar, and especially when compared to other currencies. Now, this is the important part. It's not just the physical dollar value that affects precious metal prices, but also where traders see the dollar heading that dictates supply and demand. Now, in today's modern economic world, we know that what we call paper gold or paper silver, items traded on the COMEX, for example, has a far greater short-term influence than physical supply and demand because of the leverage at which they are traded, often 100, 200 times for each trade, and sometimes even more. Now, these traders are in essence gambling with their or their institution's money, attempting to predict whether prices are going to rise or fall. As gold and silver are globally priced in US dollars, if they believe that the dollar is going to rise in price, they know that will adversely affect precious metal prices and vice versa. And yes, some of them, from time to time, attempt to manipulate the market to their own advantage for the purpose of profit maximization. So what happened yesterday and is continuing today is that a number of people are confused because interest rates went down and yet the dollar went up. In fact, yesterday the dollar index rose to just over 98.5 and today it's just above 98.7, so it is strengthening further. Yesterday when we produced our video, gold was $1,415 and now it's $1,406. And silver was $16.27 and now it's $16.04. So for those who do not believe this relationship between the value of the dollar and that of gold and silver prices exist, can see in real time how they are affected. So no more rubbish about this being price manipulation yesterday, please, as some have commented. You're just showing yourself to be financially unaware or agents provocateurs for the pumpers. As we stated in our weekly update, to a large extent, the 0.25% cut was already baked in. In other words, it was expected. It was hoped for by the stock markets that the Fed may cut rates further or at least suggest that it was on a downward escalator, with perhaps another 2 rate cuts minimum this year. The gold and silver community, and especially the pumpers, were expecting or hoping for this too. They were hoping the dollar value would fall, gold and silver prices would rise, and they would pump harder, causing further rises, and pump harder, and even more rises. You get the picture. We could also see this by the number of videos that came out yesterday before the announcement, stating that the interest rate cuts would cause precious metal prices to skyrocket. Well, they didn't. And no, it was not surprising in view of the statement which was given afterwards. The hard fact is that whereas you, as a listener, may or may not feel that you are economically as well off or better off than 5 or 10 years ago, the cold figures and statistics show that more people are in work, average wages are at last beginning to rise, and whilst things are not marvellous by any means, they are also not disastrous either. And we can't help but feel that perhaps listening to too many doom and gloom merchants is having a very different impact upon all of us than it is on the majority of other people who are perhaps more optimistic about the country's future. The stock markets didn't particularly like yesterday's announcement either, and the Dow closed down 333 points at 26,864. But at the time of writing, it's risen some 208 points and is standing at 27,073. So perhaps they're not quite as disappointed as one may have expected. So where are gold and silver prices going from here? Well, the pumpers will now put out numerous videos, and please notice how so many of them are running common themes, stating that the Fed will have to cut rates far more aggressively than they predict, that they're financial illiterates and have completely misunderstood what is going on in the real economy, and that gold and silver are still going to rise to $5,000 or even $10,000 gold and up to $1,000 silver anytime soon. Nope, it won't. Unless, and we repeat what we said yesterday, unless there is a military conflict with Iran or North Korea, there is no trade deal with China, and they step up their economic retaliation, and some major financial scandal is revealed which will undermine the economic system. Otherwise, we may see gold and silver rise from these levels, but frankly, if it's more than 10% in 2019, we shall be very surprised. Now, we have the job figures coming out tomorrow, and if these are well above expectations, then we will see gold dip below $1,400 and silver below $16. If not, and they're worse than anticipated, there may be a slight recovery. But please, if you take one thing from this video, and we are speaking not only as financial professionals, albeit retired, but also gold and silver collectors like you are too, that gold and silver long-term will provide a great hedge against currency depreciation and also potentially a capital profit, depending when they were purchased. But please do not expect a global financial collapse or gold and silver going to the moon, certainly not in 2019. But we may be talking a slightly different story as we get close to the next presidential election in 2020. Then again, maybe we won't then too. Let's wait and see. And hopefully this video makes it a little more clearer as to where we really are. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.